Yo, what's going on, everybody? TJ here, and welcome back to episode 4 of my stock and option trading journey. I figured this time I would start off by making a live trade so you can see exactly my process and see why I'm doing what I'm doing here. So as you can see, I'm looking at the S&P 500 right now, the Spider S&P 500. It's like a mirror copy of the S&P, but it's not like in the thousands. It's only 323. Easier to work with here. The ticker symbol is SPY, and this is an indice. The reason that I like to trade it is because there are no earnings, so I don't have to worry about earnings screwing the chart up and making it go crazy randomly on one random day. All right, so what I'm seeing here is, if you see this orange line, I drew this in here, and the reason why is because right back here, it hits at this peak, right? It came up, hit this peak, right? That is a resistance level, okay? Fast forward through the past couple months, and we hit it again right here. The same exact price. It closed right on it, right? Before jumping over and doing this crazy thing. Then reopened right on the line again, came down, and then it started kind of bouncing along this line again. Came down, came through the line, and now it's been using this line as support now. It won't break down below it, right? So this is a price that a lot of traders are collectively using as an indicator, right? I trade in patterns because people are trading in patterns. That is why I mark my charts up like this. These blue lines here I also drew in, and that is showing a possible ascending triangle pattern, which means that it came all the way up here, hit this peak here, and now it's peaking again right over here on a horizontal line. Whereas on the bottom side, we've got a nice diagonal trend, right? The lows are kind of like making their way higher and higher. Easier to see on an actual bull trend. Like here would be a line for the support, or I'm sorry, this would be the resistance line, the top line, and then underneath would be the support line. So I can put a good bet that it's not going out of this range if I had that drawn up. So with an ascending triangle, what happens is it usually will break through. Since we're on a bull run, it will usually break through on the upside. It's a little early to know that right now because it still can pull back. However, I don't think that we're going to be going below this support line, this orange line. So what do I have that at? I like to look at a candle that I have it on, and you can see that this is a green candle, so we've got to look at where it opened. It opened at 313 and 30 cents. So I know that around 313 is a really strong support level because we keep hitting this line over and over again. And if it continues on this bull trend here, then it's not even going to go down past the blue. So that's why I feel that 313 is a good strike to work with. Now I'm going to come up here to the option chain, open up the calls and puts option chain. And I personally like to trade in weeks because you can make more over time, and I don't mind putting the work in. So let's look on Friday. Open up Friday, 4 days from now, right? It expires in 4 days. Come up here. This is just my software that I'm using, Interactive Trader, and I know that not everybody has access to this, but I pay monthly for this software. Waiting to get the option chain data from the server. Here we are. All right, open up the Friday expiration, 4 days from now. And then right here is the deltas, okay? So right now we're at 323.79. And if we continue to scroll down, look at that. What you got to do is you're pretty much subtracting this number from 100, and that is your success ratio. So the 313 has a 90% success ratio. So I'm 90% likely to win this trade at the 313. So what I'm going to do is I'm going to sell the 313 and I'm going to buy the 312, set up as a bull put credit spread. So I come to the bull put, this is my strategies. Choose July 24th because 4-day expiration. Gotta do all of the strikes. Okay, so now I choose the 312 and sell the 313. So how this trade will work is as long as it stays above 313, I get full credit. This is the spread for the market maker. I always put it to mid. That way I get $7 per contract instead of $6. So this is $7, $93 of max risk. This is the most I can lose. So for all of my trades, I will only do 10% of my account. Right now I have $4,800. So I can max risk $480. So let's keep adding contracts. Until then, let's see at 8, oh, that's too much. 5, 465, let's see if we can get away with 6 looking like. 558, that's a little bit high. We'll go with 5 contracts for this trade. Buy 5 contracts, sell 5 contracts. $7 per contract. So I'll get $35 in 4 days if this is a successful trade with a 90% chance of it being successful in a bull trend market. Click trade. Wait for it to load the order ticket. Okay, total credit $35. Review, submit. All right, and now we wait for this to get filled. Earlier today, I did my cover call on GoPro. Now I'm going to show you what positions I'm in already. Still in this USO, United States Oil call. This is a long call. I have 88 days for expiration. As long as it stays above 27, I won't get called out. Right now we're at 29.19 and just waiting for this to continue to go up and up and up and up, and then I'll pull out. GoPro. I bought 100 shares at 487. Right now it's 494. And I'm selling the $5.50 call. It's a covered call. So that means that if it hits $5.50, it'll sell all 100 of my shares for $5.50. If it does not hit $5.50, if it stays below that in 11 days, then I keep the credit that I received, the premium that I received for this trade, which I think was $8. And I'm just continuing to do this over and over again every single week. And what I'm essentially doing is picking a number that I don't think it's going to hit in 11 days. And I keep getting this credit so that way, eventually, I'll have all 100 shares essentially for free. That's the plan and the strategy with this. If it sells at 550, that's in profit anyway. So it's a win-win trade and I love it. Pepsi. So stoked. Last week I did my first iron condor on Pepsi. And I decided to go in for another iron condor for this week because I feel like we're still going sideways. This is the chart for Pepsi. I'm trying to make this quick because I don't want this video to get too long. But you can see it's not breaking this top resistance level and it's not breaking this bottom support level. So you can see that the green and the red lines are my actual trades. So as long as it stays in between these two, by Friday, 4 days from now, I get my full credit. All right, IWM. I'm also in the IWM. This is a Russell 2000, another indice, very similar to the SPY trade. I am in a bull put. As long as it stays above 141, then I get the full credit. Right now it's at 146, so we are looking good. All right, and that is the trades that I am in currently. I'm gonna restart this video come expiration and see how they played out. All right, and we are back. So it's been about a week and a half, 2 weeks. I'm actually in Fort Lauderdale, Florida now. Troy and I decided to hit up Key West for a little bit, had a blast hanging out over there. But let's see exactly how these trades played out in the meantime. So for that SPY trade, the S&P 500, I actually did not get filled for the 4-day expiration. So what I ended up doing was making the same exact trade, same exact strikes, the 312, 313, but I sold it for 7-day expiration. That ended up being successful, made $40 on that trade. Here's Pepsi. This is the second iron condor that I did on Pepsi, and this was also successful. 7-day long iron condor, made $96 on it. IWM, the Russell 2000, this is very similar indice to the S&P 500, so you can see that they kind of play the same exact patterns. Not exactly, but pretty damn close. So I did put a bull put on this one as well. Made $96 in 7 days on this trade. GoPro. So you guys know that I've got 100 shares of GoPro and I'm chipping away with covered calls. So this was $8 for the covered call after 11-day expiration. It was successful, did not hit the strike price, which is good for me because I keep all my shares and I got paid to do it. So I'm keeping a sheet over here on Google Sheets of all of my trades. And I'm keeping track of all my covered calls on GoPro too. So originally I bought it for $486, right? So that means that it was $4.86 per share, like when I actually went in on GoPro. And I keep chipping away at it. And by subtracting all of these covered calls, I've essentially paid $449 instead of $486. So I'm gonna keep on doing that until this is essentially free. And then I'll just have 100 shares of GoPro. All right, what else do we got going on? And I also did a bull put on Activision Blizzard because I saw a good opportunity to go in on that. Saw a nice bull trend over there. That took 10 days and I got $66 out of that. All right, so far my win ratio is 90.91% win ratio, which I'm really stoked about. So pretty much I lost my first 2 trades, decided to hit my course extremely hard, talked to a mentor, and I haven't lost since. So out of 22 trades, I lost my first 2, and the next 20 have been successful, leaving me at a 90.91% win ratio. Happy about it. I really am. All right, so USO, I'm still in this trade, but at least it's creeping up there, right? We're almost in a profit margin. You got 71 days for that to go. And these are some trades that I'm in now, but that's going to be for the next video. What else do I want to show you guys? Let's take a look real quick at the S&P 500, the ascending triangle that we did. Where are we at? SPY. Come up to the chart. All right, sorry, this is a little bit messy. These are 2 new trades that I'm in on the S&P. This is gonna be for the next video though, so we're not gonna explain that right now. But if you can look closely, you can see this blue line. This was that horizontal blue line and the diagonal blue line for the ascending triangle. I believe at the beginning of the video, we were probably somewhere like around here-ish, right? You could always just rewind if you wanna see exactly where we were. But what it ended up doing was it broke the resistance a tiny bit, came back in, followed along this diagonal, and then boom. And that is the ascending triangle pattern. Broke right out and shot right up. Pretty cool, right? Isn't it so crazy to see how these patterns actually work and how they actually will play out? So crazy. All right, well, I hope you guys liked this video. I hope that you learned something from it, and if not, I hope it was at least entertaining. If it was, please give me a thumbs up. I really do appreciate it, and it really does help. And if you want to see more of my stock and option trading journey, as well as other entrepreneurial ventures, other adventures in general, because I've got a road trip to California, so much stuff really. We just left Key West. I got a full video for that. That's going to be up eventually. Make sure you subscribe to the channel. And don't forget to hit the bell so you're notified on the next video. I'm going to be now doing one on these trades that you got a little sneak peek on. Those are for the next video, so keep an eye out for those, and I will catch you guys on the next one. Later.